right, hello everybody, and welcome to today's live broadcast here for Pepperstone. We've got so much to talk about. It's been an incredibly volatile week since we discussed everything last Wednesday, and obviously we've seen the biggest session in quite some time. On top of that, we've seen up, down, and all around. But one thing's for sure, we have had some trends, and one of those particularly has been gold. Tyrone, as always, we'll be covering stocks, commodities, and of course the currencies today. But there's been a lot of movement, a lot of key levels being reached this week, and quite a lot of potential new starts of trends, isn't it? So what an important level we find ourselves at.
Absolutely, yeah, it's super important. I think some of these levels that we're seeing right now. Welcome everyone, and thank you for joining us tonight. Look, I think gold is probably a great one to start on because I know it was a highlight that we talked about last week in terms of what it can and can't do, and I think we were all of the opinion actually that 3,300 was probably on the radar for it, and only just today did it get there, another brand new high, and I think it really exemplifies the fact that gold is its own beast. It's not really, it's linked to a lot of things, but it's not really linked to anything in particular. That it must do something if another instrument does something else. Gold can go completely against every other instrument known to man that we can trade. And it certainly has done that. It's been an amazing ride for all the people who have taken it up, and hitting a 3,300 is quite an incredible feat.
All right, well, yeah, let's have a look at this. So 3,300, obviously the number we're seeing right now. And the question always that people say is it time to short it or something like that? I think what gold proves to you time and time again over the last, thousands of dollars, really more $1,300, is that it's just been in a sustained upward trend. And as Tyrone mentioned, it doesn't have to do what you may think it needs to do, which is have these substantial pullbacks. Obviously, there are key levels that it reached, such as this little demand here. There are key breaks, such as what we saw only a few weeks ago, which is the breakout here of 3,000. This is actually last window, 3,056. And while there was a short case to be made, probably around 3,100, that was quickly extinguished at 3,135. So I think the thing is that if you even are thinking about going against gold, you've got to do it in a way that's sustainable. That is that you're going to actually take, of course, a stop loss hit. Now, in today's video, we want to talk about getting involved in these trends. How do we do this during volatile times? And one of the techniques, of course, that we often use is the anchored VWAP technique. Now, what that is that we basically put a anchored VWAP within the TradingView platform and Pepperstone. And what we do is we actually chuck it behind some of the last lows or highs. And it's kind of like a self-adapting indicator. So it's always market adaptive. And what it will do is it will show you kind of like a dynamic support or a dynamic resistance on the way through. And what you'll find is this: when you put this behind very key levels, sometimes you'll get incredibly good buy levels. So if this market hadn't have gone off like an absolute, freight train, there would have been a good chance that these particular yellow areas here that are based on, of course, the anchored VWAP could have been very, very good zones to get in on. Now, I traditionally like to do it off the lows, so usually the low that enters into the price itself. And we'll actually just show here the US 500 and do a similar technique. So we'll use here the kind of stop loss area of the low down here. Now, this was before, of course, we got the news of the tariffs kind of being reduced. And what you'll notice straight away, guys, is that we have a level that has been respected once, twice, 3, 4, 5 times, and getting close to again. So there are some important differences here. When it came down this time, it was continuing to find base there. What's happened now, though, Ty, that may make you think, wow, this anchored VWAP may not hold? What's the importance here for a lot of viewers out there?
Well, as you can see, we've already got a level. We've already got a sorry, I lost my screen there for a second. We've got a full reversible candle straight up. So we've got a bullish engulfing candle straight up, and also the fact that it's already pushing past the look. The one thing we must understand, we're already in a downtrend. Okay, so. And I think we probably need to preface that prior to Liberation Day or Tariff Gate, as we're kind of labeling it. We were in a downtrend already. Okay, so to me, and we've talked about it a little bit, we're almost trying to reverse what has happened over the last, call it 7 or 8 days, and pretend that actually didn't happen and go back to what the market was doing prior to that. But as you can see here, we're already in the downtrend. We know that already, but we've got a lower high, lower low sequence. And also, we're about to get a 20 and 50 moving average cross, as we know. But the significance of it is that the prevailing downtrend was already in place prior to a lot of what had actually happened. So we know that we're seeing lower high, lower low sequences. Okay, we've already got that. That's why this VWAP is in extreme danger. I think. I think it's in a lot of danger actually. Um,
Yeah.
and that's simply because we're using the prevailing trend as the momentum shift. And look, it's going to be a very interesting one. I I think this level is very important. There's no question about that. But again, it was probably the level that had to hold prior to the Liberation Day. Let's call it volatility. We can call it whatever we want. We were already in a downtrend at that point, and that sort of 5,500 something that, or 5,550 is something that really had to actually hold even prior to that. So it's a very, very key level for it, I think. And I think it's a level that's going to probably determine the next maybe 12 to 14 weeks of trading, especially since we are going into what is traditionally a very soft time of year, Tom. We know we're very close now to the sell in May phenomenon that, quite often does drive the market lower. And what we've seen in the past, and I think you've mentioned this a few times over as well, the sell-in may often start a few weeks early. It does actually tend to happen later in April when the sell-off does begin a little bit. So it's certainly something to keep in mind.
Yeah, so there's different types of seasonality we could be looking at, but I think the key here is probably the lower high. So obviously, if we haven't made a higher high and we're retesting that anchored VWAP, that could already signify further weakness that we've already seen.
Yep.
So the other thing about anchored VWAP that's really good is that when you're using it, the first touch is the key. So if we go back over to something like gold for a second here, and you're looking at this and you're looking at this low, the key that you really want to be looking for is if it is to come back down in the future, it's the first touch that's most likely going to be respected. And you want to treat it that way usually for all of these anchored VWAP levels. So again, if you were anchored VWAPing off this low, you would have been really watching this kind of area and this kind of area. And obviously you want to be very exact with this type of thing. So you want to be able to pull it to the right areas. But it's a good way of following trend. So we use moving averages, 20, 50, 200 moving average, obviously for the simple. And then we use anchored VWAP as well off the lows. And what you'll want to do is make sure it's exactly on those lows because that will make a slight difference. Also, a top tip is if you ever have like a really big news event, such as the Liberation Day event, it's often worthwhile putting a anchored VWAP on those particular levels as well. So with gold, is there any stopping it? Well, the general thought process is you want to keep following the trend until it kind of busts down. And at this point, it's being a series of higher highs and higher lows. So probably no stopping it for now. Let's just jump on over to silver, though, because, of course, where there are other opportunities are things like silver. And I'll just get rid of these because they always seem to be resetting themselves. But we did just pass through a key level for silver. And you'll notice here we had this trend line. It breached. The market then bounced back up. As we talked about last week, we saw very strong volatility down here, plus structural levels. So very nice there. And then we've come up to this key level where you've got moving averages, you've got the trend line, you've got everything. And let's have a look at actually the price action here on the small time frame so you can get a bit of an idea. So this is what we often consider like a coiling of markets. So of course, as a pattern-based trader, you'll see this as an ascending triangle. And it's making a series of higher highs and higher lows equal highs and higher lows as you're coming into this critical point. And what happens is sometimes during let's say a period of an open, such as London Open or New York Open, is that you'll see this level break and it becomes a very, very good trade session. And of course, today we saw that with this huge movement out here from silver as it breaks through the high, retests. It may have wiped that low, by the way. So this would have been a very feasible possibility. And then it starts spiking up. Now, if it can hold this daily closed high, I think that's significant for silver because that could be pushing it back up to, starting to play catch up to gold and getting into the 34 kind of 40 zone. What do you think about that?
Absolutely. Yeah, no, I totally agree with that. It's It's one of those ones where, look, it's had obviously seen a really, really big reversal, like we're all aware of that. But I think what those smaller time frames showed us there was that we were able to actually take advantage of this move. It wasn't like you look at it on face value on a daily chart and you say, wow, how do you even get involved in that? But I think breaking it down to the smaller time frames, you can see many, many entries. And that ascending triangle was a very strong pattern, actually, especially at the level that it was trying to break. And that's the thing. When what we find is patterns are always better when they are actually substantiated by something else. So we've got a key level that top of that triangle was actually trying to breach. So the fact that the higher lows are happening every time it tries to sell off is telling us the momentum is actually building underneath it, like a coiling effect, like Thomas said. And when it does eventually break, it generally has quite a bit of gusto. It was actually quite a good trade, actually.
Yeah, a very solid one around this resistance area. And again, you would have been the thing I wanted to really point out here to everybody is you might have been trying to short this level because it is an obvious short zone that you may want to target, but there's no weakness. And what that means is that as it's coiling, as it's making those series of higher lows, why should not be shorting this? And I bet you most people will be at around this level. And that's because it's not that you've done bad analysis, it's a key zone. Like Tyrone's mentioned, it's a key zone, it's an area of our interest. But what you should be thinking is, well, the trend is actually coming up into that. It's making a series of higher highs and higher lows. So why should I really be going against that? And really, it's more of a patience, react, don't predict style moment where you're looking for the break. Here's the break. You're looking, therefore, for the timing, and the timing seems to be happening around the beginning of London session. That's a great combo. And if it was the beginning of New York session, it would also be a great combo. Specifically London, though, London and metals, it's always a great combo meal deal.
Yeah.
Can't
Yeah,
hate on that
I
one.
think it's very important. It is very, very important to understand price action and read what price is trying to tell you. Yeah, the fact that it's making higher lows is it means that the sellers are losing the battle earlier every single time. Like the buyers are kicking in and adding strength to this trend earlier every single time it pulls back. So it's showing that the wavering of the strength of the sellers is actually diminishing every time it makes a new low. So it's really, really important to understand that, and that's why you would never be selling in that. It would be a very, very bad idea to be trying to sell that because very seldom does it actually sell off from those sorts of coiling effects. Generally, the strength of the buyers are going to win out in the situation.
All right, well, let's jump from that one over there to the dollar tie, because the dollar's been absolutely wild. I mean, we went down underneath parity there. We obviously said the last of the bulls. We've had this area in here sitting for a while. We're probably oversold. You'll see that in the euro when we look at the overbought area. It actually hit the zone we spoke about. We have hit into what I would call the little secret, the secret demand that's underneath here. And what we're looking for at this point is, if I was short, I'd probably be taking. I mean, personally, I think that this is like a take profit zone for a lot of people. A lot of shorters will be saying, well, that's the support I've seen before. But this opens up a great opportunity for traders and investors because this is where we start to build structure, isn't it? And we might see
Yes.
this sit round for a while. But what if it did something like this? I mean, would we be suddenly saying, okay, well, there could be a trade to the upside, even though it's in the downward trend?
Yes, I think that the dollar index has been extraordinarily weak for well before tariff gate. So there's no real. It's not like it was a surprise. All it did was help accelerate it down to these levels. So it was already in the downtrend, so nobody's surprised about that. But like we've probably mentioned several times over the last few weeks, if it's going to hold, this is the area that it's probably going to hold that. It's a very, very important zone for several reasons. And it's not just, it is a round number, obviously, it's the 100, but it's really numbers based around that. You're sort of talking anywhere between 99.50 all the way to 150. So it's sort of almost that 100 point range that you're talking about. But conversely, I'm glad you brought that year up actually, Tom, because it really highlights what it has done. It's at a very, very heavy resistance level too, very, very heavy. Okay, so you could see a turnaround happening here, and it might take a while. And look, I actually welcome a while waiting because I think that consolidation and actually build up of consolidation in these levels, both on the upside for the dollar index and for the sell-off on the euro, are going to make more sense if we actually spend a bit of time here rather than just reacting as soon as it touches. and then goes in a direction very, very quickly. I think I welcome the consolidation in this area actually, because I think it actually helps strengthen the trade when it does eventually move in the direction that we want it to move.
And also consolidation could be like a coil like we saw in silver, where we consolidate here in the dollar index, we actually end up breaking to the downside. It's going to be a ripper trade. We consolidate here on the euro and it starts breaking to the upside. That's in the direction of trend. You can't hate that trade. Like it is what
No.
it is. Like consolidation is good. And then the next level would be 1.16. So it's not like there's not, some decent equilibrium there for the market to move through to. But the key here is, again, part of the reason we did today's show was how do we actually look for trends inside of this volatility? Well, when you broke down here, the likely answers of resistance were these two areas here. Now, we talked a lot about the dollar index and we spoke about parity 99.50, as Tyrone alluded to before, 150 to 99.50, this kind of range. Now, we've hit that, but that's kind of the zone where the TPs, where the profit takers and the people are going to be looking for. If you're a trader, you're going to be looking for those zones to say, okay, well, I expect consolidation to appear here. So no surprises we see consolidation. It's not a clear buy on the dollar, though, or sell on the euro. That's not how you have to look at it. You have to look at it as, again, patience, react, don't predict. Let's find the opportunity. Let's recognize we're now probably going to be range bound for a period. So if you are scalping in between, don't be out there thinking I'm going to get like the biggest trade of my life because it's not going to move as much traditionally. Yeah, it's really key to understand that concept. Let's go over to the odd. This is totally different to the others. So let's have a look. The Australian dollar is not like the others. Let's have a look. So big sell, and I think we need to allude this one to the higher time frames. So very significant sell, very significant level. The Australian dollar, it's almost worthless on the global scale right now, Ty. It's down that low. But we're back in the 60s area, and we obviously didn't hit this since 2020. But have a look at this rejection. Now, I think the Australian dollar, again, most markets correlate together, but what an interesting resistance it finds itself at. A series of a really weak market, rally, drop to a lower low. What happens if we break this 64? I really like this level as a big game changer, I think, to trend, which has been predominantly down. What are your thoughts here on 64, Ty? I think it's one of the more solid levels that we've seen in a while. Obviously resistance for now, but what if it breaks?
I think if that level breaks, I think there's probably 250 pips on the upside for us. I really think that it can find itself back at 66 to 67 very, very quickly. And look, it's a very, very important zone. I like the rejection. I do like the reversal that it's had, and realistically, it's setting itself up. Look, it's very close to breaking those key moving averages on a lot of key time frames. There's no question about that. It's a very, very important level for it, 64 cents. I think if we get daily closes above that and we continue that momentum, I would like to see, we'll go to a 4 hour chart in a moment and probably a 1 hour chart to show you what we're talking about, how we can actually trade inside these trends as well. It's important for tonight's, story. But you can see even there, like you can see the pullbacks. You got a series of higher highs and higher lows. It looks a lot neater. We had the double bottom as well. You can see that very clearly. But yeah, this is a very, very significant level, and I think if we see a break above that 64, I think the move up from there could be significant. Yeah, to probably 66 before it finds any more serious trouble.
Yeah, I've just put an anchored VWAP in there just to demonstrate the same thing, which is that if you put an anchored VWAP off this low, significant low, the market then breaks through 64. Obviously, that could be alluding to a 66, 67 move. And then we come back to the anchored VWAP, wherever that is. The first touch traditionally is quite strong. So we might have lost Ty there, but with the first touch is quite strong. We've got a question coming in here. Always feel free to ask questions. Michelle says, good morning. Wow, gold. Yeah, absolutely, Stuart. Great to have you here as well. Thank you very much. Coming in from Scotland. And then we also have Calvin here with a question about the US dollar CAD. US dollar CAD has pulled back on the 2 hour time frame after close above the candle on the, let me just get this right, on the daily. Would this be a good time to buy? Well, we can have a look at it from a technical level, obviously, for you there, Calvin. We'll check that out in a moment. Obviously, you'll have to end up making your own decisions, though, of course, with the disclaimer there, but we will look at it from a technical level. So let's now quickly check out this point And just quickly, I just want to mention here, Ty was talking about the 4 hour and the ability to get a pullback. I want to mention the daily. Really solid thing to imprint in your mind is this type of setup. Very weak looking market, suddenly engulfed by a huge green closure daily. Now that happens at an important support, that happens with incredible volume, that happens with a significant close above what you know will have most likely stop losses below it, above it. So this is going to be a squeeze type of thing, and that's why we've squeezed to this level. But yeah, it's just one of those things that you don't see that often, but when you do see it, it's certainly quite key. Let's have a look at the US dollar CAD then, Ty, because quite a lot of currency moves have been quite good. Now the question here is, it's a 2 hour pullback. So let's go back to higher time frames. Now some of these lines are probably just from some old thing that we were doing as an experiment. So let's get it back and actually start thinking about this. So we've got here what we call a long leg doji. That's obviously a considerable point. We've got some form of demand in the future down here. So obviously very important to hold around this zone for the buyers. And we can go to the daily now. We usually start with a monthly candle if we're going to. So yeah, there's a decent amount of potential demand in this area. Okay, so that's why we're here. We go to the 4 hour. Okay, we go to the 2 hour. Obviously, Calvin's question here is, have we done enough to change trends? So basically, the idea is you've got a low, you've got a high, you've got a lower low, equal high. Okay, you've rallied above that. And I'm assuming this is what we're getting at here. So is this like some kind of little double bottom? If it is, kind of already completed that. So that's the A equals B kind of concept. And the problem is as well, I would argue this is also another level of resistance. So let's just go to the 4 hour, which is one of Ty's favorites, and have a look there. Okay, so we've still got supply. Go back to the daily. So daily 20 is quite far away. So has it done enough to change trend? I don't know. I'll give you all thoughts, Ty, and then I'll come back to my one, I guess.
Yeah, not quite enough yet, but I tell you, it's getting close. I think probably the 4 hour would probably be the key. The 4 hour and the 2 hour both are kind of painting the same story. It is trying to make a higher high. So you can see we've got the higher low sequence already in play. For mine, it needs to get above that high at about, well, it needs to break above 140. I mean, that level then needs to get broken. If we get that done, then we've got a sequence of higher highs and higher lows that we're comfortable with on the 4 hour chart. And then I think it opens itself up for a move back up to around that sort of 141 to 141.50 area. There is a little bit of movement in the CAD, I think. There's definitely opportunity to go considerably longer than where it is right now. I think that 141.50 is a pretty solid level. But for mine, I think it needs to close above the 140. And if it does that, we get the combined strength of the higher low sequence on the 4 hour, and all the smaller time frames will follow, of course. And that gives us a big, I think I like it. I do like it, but it's got a little bit more work to do. I want to see it because, like Tom said, that at that 140, there is very strong resistance there. So I'd like to see that broken before we get excited. If we get that a break above there and clear that zone, then I think it opens itself up for a move for, effectively 150 pips.
Yeah, I think like this 141 would be a good target. Obviously, most traded area on the way down. You wouldn't see that usually in price either. It's not that noticeable. And then, of course, you've got this level that we found recently, which is the most traded level, and it's at that next level. So is it at some form of support? Maybe. I mean, this is obviously a volume wall. You've got a volume wall here, and you've got a massive volume wall compared to the others here at 141. So yeah, I think if we find some strength again, we clear this would be the next level of traditional equilibrium. And it is against trend, so you need to remember that. The other thing you might want to do as well when you're doing this type of analysis is use our anchored VWAP from before and have a look at, breaches of certain zones. So we can go back over and we can check or put a few anchored VWAPs on our charts here to have a look at a bit of some interesting zones. And of course, at the moment, looks like that 140, 139 is going to be the break. So we break that, then we can come to this next one, which would be around 141. So I kind of like the idea of this to this being more likely as a scalping day trading kind of concept. Is it the best I've seen? No. But yeah, that's how we would start to break down this chart anyway. There'd be obviously more techniques that we would use, but at the same time, if you wanted to apply some anchored VWAP, you could look at it. And of course, from a technical short level, a lot of people are going to be looking at trying to short that zone. That's why it's become that important area. So you've got a lot of contradictory ideas there, but at the same time, once you see a break, once you see certain structure, then you can start to really repeat that process. Let's now move over to US oil, which is actually getting a little bit of interest in it. Now, this is one that we mentioned last week was a no-touch zone, but things changed, Ty. So all of a sudden, it has held 60, obviously huge bounces off the low, small time frame change towards the bull side here. Some people will have tried to enter into this, obviously a very negative correlation. Inverse head and shoulders, neckline. Interestingly, it proofs. So we'll just quickly load this up. We've got here this market. Oops, that's the grab. Oh, we're not able to grab our proof. Here's our proof. So it proofs pretty well the neckline to the highs here.
Yeah.
Now, will this be enough if we break this neckline? Is this enough to convince you? Look at this weekly here for a second. Big wick, held the 60, the 59.50. Is that actually finding strength after a huge sell? What are your thoughts?
Yeah, I think it is. I think it is. I think oil wants to be closer to 70 than it does to 60. And I think what it's doing now is really probably building that consolidation. I think it's forming a little bit of momentum, a bit of a coiling effect, if you like. And I think it's very possible. I do like it. I I think it's got more chance of getting to 65 than it has to 55 for a lot of reasons. And I think all the oil companies want that to happen. I think nearly everybody, except the people at the petrol bowser, want that to happen. I mean, obviously, as citizens of the world, a $55 barrel of oil would be far better for our petrol prices, Tom. But, we don't. The market doesn't really care about us, of course. It wants to it wants to make money, and I think it's going to make the oil companies start to make money when it gets closer to 70. So I think we've seen the sell-off. I think we've probably seen the worst of it. So unless we see another, black swan type announcement where, a tariff gets released that's going to directly affect oil, I think I'd like to think actually that we've probably seen the worst of it, and it might get back into a trading zone somewhere between that 65 and 70 again. And I think price action's kind of indicating that that's a pretty good chance.
Yeah, really interesting level here on the oil one there. Michelle also mentioning on CAD, Ty, that there's an interest rate decision. Now, the reason I went straight to oil after CAD is because they do tend to have a little bit of a relationship together. So obviously, we are that may be a very important point for the traders out there that are looking at the CADs and the oil trade. And no surprise, again, we're at this kind of critical junction between the potential of a bull buy or a sell, as that interest rate decision may have an impact, and obviously trigger some buyers or some sellers, and then get us some structural break. So we talked a little bit about the S&P before. Just quickly on the levels that are worth watching. 5600, 5670 is a most traded zone on the way down and a gap fill zone, so that's worthwhile watching. 5200 has quite a lot of puts on it, so that's an interesting zone as well. And then we're in the middle of nowhere land at the moment in many ways. So we mentioned that before. NASDAQ is similar, but the most traded zone is about 19,600. So if you wanted to know where it is, that is the highest level of concentration of trades on the way down. Let's have a quick look at Bitcoin. So Bitcoin, sometimes people think it leads, Ty. It does have that double bottom in it from last week. Interestingly, we actually got the rejection after the Wednesday when we were talking about it, and we actually found the market recovered. It in some ways has done the double bottom, but I feel like, there is still potentially a little bit more. We could get up to 88, 89. This is going to be a super important level, this second buy zone area for a lot of people. So obviously the reason why it's there is because this would change a lot of structure. We've gone from a series of lower highs and lower lows to potentially a higher high. And for swing traders, for position-based traders, for investors, this is going to be a critical zone. So I would think that there's going to be a lot of correlation. We're going to have 5,600 potentially if we've got this level up here. We're going to have that NASDAQ, maybe that 19,600. And then, of course, we'd have Bitcoin at about 88.7 or something. So if all of these levels broke to the upside, that's actually a good sign that maybe the worst is behind us. But for now, as you mentioned, the trend is still down. And therefore, you have to kind of think of hostility in the market as being more aggressive towards the buy side, just for now, I guess.
Yeah, I think it's going to be a very interesting seasonal period over the next month. I think from the last week and a half ish of April to mid May, I think I'm going to be watching these markets with a great deal of interest to see if we do get the seasonality to kick in, from levels that were there before Tariffgate. It's going to be very interesting to see if they play out. I I do like the stability that we've seen in a lot of these stocks. I'm glad we don't like the volatility that we saw over the last few weeks because it's very difficult to trade. We want tradable markets. We want controlled volatility, not out of control volatility. And even Bitcoin, one of the most volatile of them all, is still giving you an opportunity to get in and out at these levels. You can see if you break it down to the smaller time frames, you're seeing all the patterns that we talk about, week in, week out. So you definitely get your chance. I just think that we have to keep a very close eye on these very key levels. I agree with you that the a break of that 88, and I think that there's $4,000 there up for the taking because really 91.80 to 92,000 is probably the real target for where the real heavy resistance is. We are getting a resistance base formed at around this sort of 87-ish area, but I think a move up, up to that 88 is going to be the first point of take profit for mine. I think if it can get there, it's going to see a significant amount of resistance. But if it gets through that point, then 91.92 is the next target. So it's doing the job, isn't it? I mean, like I say, we talk about it every week now because I think people are interested enough, and if there is enough interest, it means there's a lot of trading happening on it, and of course, trading volume is what causes technicals to be sound.
Yes, and also it's held up so much better than other cryptos. You're really seeing that delineation between Bitcoin potentially being a gold proxy concept versus the other cryptos. So I think the interest is there for that. There's some things we want to kind of talk about just so you guys can be aware of these are probably just yields. Now, this is not something that necessarily you want to trade, but you do want to be aware of it. Now, we actually saw some significant yield breakouts last week. And Warren Buffett often says that his favorite yield is the US 10Y. And this is why a lot of people have been talking about bonds suddenly. Most people don't talk about bonds most of the time, but whenever you see a crisis period, bonds come out. We had one of the biggest spread basically moves here in yields in 1 week ever recorded. And this obviously says, okay, someone's freaking out. And at the same time, we hit some critical zones. I think that it's worthwhile that traders pay attention because things could go haywire very quickly, especially if the US 30Y was to break through 5%. So this level up here needs to be watched. You can see this huge change from 4.3 to 5 over this whole tariff tantrum stuff that's going on in terms of the market. And this is a huge deal. So for traders and investors out there, for swing traders, day traders, scalpers, doesn't matter. These levels are worthwhile setting alerts on because if the bonds market starts to play the game, as he gets involved in these markets and volatility starts spiking again, that's when you get those really huge illiquidity events as well, which can move price very quickly, and you must be aware of those. So I think a lot of trading these high leverage, not high leverage, high volatile periods, we need to always be looking at the VIX. We also need to be looking at what breaks the market in terms of makes the market more freak out, and the bonds market is that. So the US yields are well worthwhile paying attention to in the future if they are to hit it. And, I wouldn't actually be sitting here looking at it. I'd just be setting a quick alert. If it goes over 5%, you've got an alert, bang, done. That's it. Then at least you know what's happening. I think sometimes people forget to put in these alerts and they're not aware of the situation and they can get caught off guard. So, but one of the top tips of today's session, other than anchored VWAP to follow trends, first touch is particularly good off the lows and highs, but also structure and everything like that, but also watch these yields this year.
Absolutely.
Ty, do you have any top tips for anyone?
Yeah, probably the top tip is don't forget we've got Good Friday on Friday right around the world. So quite often what we do see leading into a holiday is a little bit of market optimism. So I just probably be mindful of that. And I think it would be good. I'd welcome probably just a bit of consolidation for the next couple of days, Tom, to be honest. Get through the Easter period with the markets relatively stable where they are right now. Because I think that we can probably see an establishment of some trends shortly after the Easter period. So just be mindful that Friday is a day that's completely off around the world. So we're going to have a shortened week this week, and I think a lot of the time Monday around the world is a public holiday as well. So yeah, generally, and I say that generally, going into a longer weekend or a holiday period generally sees the market relatively happier than sad. So I think, we might just see a little bit more positivity over the next 24 to 48 hours. But when you are placing your trades, if you are placing any more this week, just be mindful that there is going to be a significant period of no trading. So just be mindful of that.
All right. So yes, generally, again, inverted commas, you will see bullishness. Actually, interesting. The next session open, that one can be the doozy. So that one can bring the vol. But either way, I'm sure that it'd be good to see market structure up, and we are at those key levels: US dollar, euro, US dollar, S&P getting close to this resistance area, Nasdaq very similar. Notice there's correlation across these pairs. Markets are linked, so it's really, really important. And watch that US 30Y as well, guys. It's going to be worthwhile knowing. Stuart has here a question, and he says, thank you very much for making these vids. And then also says, have a good one, and I'll see you next week. All right. Well, thank you very much, Stuart. Always appreciate having you and everybody else that does come out to these live sessions. If you're watching in the YouTube down below, then please remember to subscribe. Click on the link in the description, and we will see you next week to talk about these markets and find out what exactly is going on over there, over in the US, and how things are going to work. Also be reminded as well, we're in earnings season. So we'll see the big tech coming through on Thursday, which will be TSM. That is a big semiconductor. And then also, of course, we've got Netflix. And then next week we start big tech. And big tech's guidance, it's the guidance. Don't worry about the earnings so much. It's going to be the calls after that. Oh, it's going to be fun time. We're listening to 2 hours of people talking about AI.
Can't wait.
That's what it's going to be. All right, everybody. Thank you so much. See you next week, guys.
Thanks so much, everyone.
Bye.
Have a great Easter.